It's UPBOptionMillionaires.com on this Wednesday, October 21st, 2015. It's about an hour and a half after the closing bell. Look at S&P 500 futures falling into the close and then some. Recovering a little bit, though, about 2 points off the lows. But you can see overnight we hit our highs, and we had these spikes out of nowhere, a continuing theme the last couple of weeks. Look at a massive spike we had just before stock prices collapsed into the close. Something to watch for. And then if you look even further back, going back to last Thursday, we had this rally out of nowhere. Similar consolidating pattern here throughout the trading session. And then out of nowhere, the buyers who weren't so anxious to buy here, decided to buy like crazy here. And, that wasn't enough. They had to buy more here and here and here. I talked about this at the blog at Option Millionaires this morning. This consolidation phase after this unexplained spike has been finding support. We've been getting these spikes again. Look at these massive spikes we're getting to the upside. We slowly dribble down and spike. Slowly dribble down. Looks like we're going to fall. Bow. Nope. Looks like we're going to fall. Boom. And then we spike overnight, and we continue to spike. Look at these spikes in between. But we have broken support clearly. And this spike is going to be explained last week's inexplicable move to the upside. Will be explained when we reverse course and come back to it tomorrow, when that would just come full circle. And then we just go back to looking at the longer-term pattern here for the market. If you pull back from a 3-year perspective, you can see this topping pattern I've been talking about still coming into play. We'll see if we break this 2,000 level on the S&P 500. That'll be key. This is the former resistance that we broke through back later last year, and ultimately heading up to new all-time record highs. Well, this move lower that we had back in August, now if we do not reclaim those highs, putting in a wonderful long-term topping pattern, is going to see equity prices fall. It's been a really monumental rally. We broke through. You draw a trend line across the previous internet bubble, financial crisis. Broke above that, but it looks like a top finally could be in for the market. We'll see. It's tomorrow, and short term is going to be key for this market. Something to watch, again, is crude oil. Everybody talked about crude oil the last couple of weeks. Oh, it's bottomed. Here's the bottom, folks. The bottom we've been talking about. And what I've been talking about is this trend line that goes back 20 years that we have not been able to break above. And you can see crude oil is starting to roll over. I've been posting charts on Twitter at Option Millionaires and StockTwits about crude oil and how it has been leading the market. Well, if you look, crude oil has been melting lower since the end of last week, continues to melt lower, and guess what? The market is starting to follow suit. And if you look, we're going to head back to the lows that we saw earlier in the summer. The 38.06 level for crude oil, you can see this 44 level here is acting as support. We got to break through it first, and that will put us and set us up to new lows heading into the end of the year, which really doesn't jive. It's the colder months. You would think demand's going to be up. Also, let's watch the VIX. The VIX has been the tell, and if you look earlier in the trading session, again, it was yawning. It was yawning, and then out of nowhere, towards the end of the trading day, we just started to spike, and look at the move up we had into the close, closing at the highs of the day, up 6%. Still well off the highs that we saw even just a few weeks ago. But something, again, to keep an eye on after this crash spike high. We've been bleeding lower. This is really the first big candle we've had to the upside since, I don't know, the middle of September. And if you look back to the middle of September, this is something else to look for. If you look, the S&P 500, this is the SPY here. You can see it's starting to roll over, breaking support. But if you look over the last year, the middle of the month has marked a turning point, especially the last couple months. Look at the middle of September. That marked the highs that we saw for September. We sold off into the end of the month. Well, here we are again in October. The middle of the month, starting to roll over, possibly. Is that going to set us up for a break here back into the lows that we saw at the end of September? So that's something to keep an eye on. Oh, also, let's look at the U.S. dollar index. The U.S. dollar index, I think, is poised for a new breakout to the triple digits and new highs, and new multi-year high. And you can see the move up we've had. Off support, everybody thinks we're going to break lower out of this pattern. I like the support. Look at the support. We're bouncing here. We actually made a higher low and look poised to break into the triple digits. Some earnings reports. Yes, earnings. Well, nobody cares about earnings anymore. I guess earnings don't matter until they do matter, if that makes any sense at all. American Express reported earnings. The stock's been rolling over ever since American Express was upgraded to buy by Goldman Sachs earlier this year in January when the stock was over $90 a share. Just like they downgraded it to sell when the thing was at $10 back in 2009. So you can see if you just did the exact opposite of Goldman Sachs, you've been doing fabulous. One of the reasons I'm bearish on this stock, not to mention the chart I brought up at the blog at Option Millionaires, so you check that out. But you see we're down after hours for American Express. Another stock that I'm in for puts, and then we got into $76 puts today. American Express, really inexpensive risk trade for a move to the downside. Same with Caterpillar. I'm in the $68 puts. You can see the move up we had. I got into the puts here, was down on them some 30-something%, but reclaimed those losses and then some. Here we go. We're setting up after before the bell tomorrow morning, before the market opens for trade. Caterpillar. Are we going to come back to the lows that we saw when they pre-announced and said, hey, earnings suck. Look at this trend. Look at this. Came up perfectly to it. You could draw a line across going back to the start of the summer. Came right up to it, failed, rejected. And are we going to head lower? Caterpillar in those for earnings. We also have Google, which had a really volatile trading day for Google. Started off the trading day, and this is, look at it, last earnings report. Actually, we had a nice run-up weeks prior to the earnings report. We hit record highs the day after Google reported its last earnings. Let's look at the last 5 trading days for Google. But you can look, had a nice, look at that fat finger spike. Had a great move to the upside, hit the $700 level again, but faded. And you look at its consolidation, fell, closed off at session lows. So that's going to be one to watch. If you're trading for upside, the puts a little more expensive today. The calls a little cheaper because of the move to the downside, 1.2%. And Amazon seems to be cleaning its 560 level. Both look really bullish on a longer term time frame. Yeah, and again, here you go with Google. You can see the nice flagging pattern looking poised to break out the record highs. And Amazon as well. Nice pattern. The trend remains up. Couple double tops to watch for tomorrow. Home Depot hit a new all-time record high. Double top going back to August. Price line. You can see the rejection in price line. Rejection. Look at this. Another nice double top. You say W formation here, but I think more or less this double top pattern is going to play out. And a couple names have been looking around. Expedia, same here. Double top. We're seeing just a short-term pullback, if nothing more than that. All right, UPV, I'll see you in the chat room at Option Millionaire. It's going to be an exciting day. American Express going to work out so great. And, of course, we can't end the trading session without talking about VRX, Valiant Pharmaceutical. Nice wick to the downside, traded at 118. Big recovery after the company came out and, denied allegations about all of the shenanigans that are being highlighted in a lemon article. Lemon, citrus, lemon man, lemon, stock lemon. All right, UPV. Everyone have a great evening. Goodbye.